Welcome back, fam. It's your main man, Mac Hoddle here from the team at Crypto Tax Audit. Hope you're all hodling in there with this quick market pullback. Remember, it's not a dip, it's a discount. I hope your bags are packed tighter than a ledger seed phrase, because Bitcoin's next moonshot is coming in hot. Let's go! 100,000K and beyond. But while we're gearing up for liftoff, let's not forget the reality check. Uncle Sam has thrown a curveball that every crypto trader and investor needs to know about. In August, the IRS dropped some new regulations, the broker-dealer regulations, that change the game for how taxpayers report crypto income. And, these new rules? They're a massive reversal of the guidance we got back in those 2019 FAQs. The IRS is basically saying, forget what we told you before. Here's how it's going to work now. The big change. When calculating gains, you now have to use FIFO by account. That's right. No more universal approach where you could cherry-pick which coin to sell from anywhere. Now, if you sell a coin, it has to be from the same wallet or account. This is going to impact every single trader and investor. By the end of this episode, you'll know exactly what the inventory snapshot is, how to capture your portfolio balances, lock in the necessary details, and stay ahead of these IRS rule changes. If you're ready to get serious about your crypto taxes and need a plan for these new IRS rules, visit cryptotaxaudit.com/1099. The link is in the description below. Now grab your notebooks, smash that like button if you're ready to boss up on your taxes, and let's dive in. Once you've signed your safe harbor allocation plan with cryptotaxaudit.com, completely free and with no obligation, the next step is taking an inventory snapshot. All right, so you've probably heard the term thrown around, but what does it actually mean? Picture this. The inventory snapshot shows each cryptocurrency balance by account and wallet. This is the portfolio of each account or wallet on December 31st, 2024. This is similar to businesses that take stock of their products and inventory at year-end. You are taking stock of the cryptocurrencies that you hold in each of your accounts and wallets. Once the screenshot is taken, do not make any transactions until the following day. Pro tip: the snapshot should include cryptocurrencies you own that are held in validators, staking pools, liquidity pools, borrowing or lending protocols and accounts, and other situations where you own the cryptocurrency but it is being held by a third party. So now that we know what an inventory snapshot is, let's get into how to actually take one, starting with centralized exchanges. First off, for each centralized exchange that you use, access the portfolio view of your account, which shows how much of each cryptocurrency you hold. Take a screenshot of your portfolio that includes the ticker of the cryptocurrency and amount, the date and timestamp showing December 31st, 2024. Save the screenshot and name the file after the centralized exchange or account name. Pro tip: make sure to capture all sub-accounts. Some centralized exchanges may have separate accounts for spot trading, staking and earnings, futures trading, lending or borrowing, among others. Now, let's bring in our crypto tax audit legend, Wallet, to expertly guide you through the process of taking an inventory snapshot of your wallets.
Hey, McConnell, great to be back. So we're diving into taking inventory snapshots for wallets. This part gets a bit hands-on, but don't worry, it's completely manageable.
Can you walk us through the different methods for taking an inventory snapshot of our wallets? I hear there's more than one way to do it, and I'm curious about which method you recommend for the best accuracy.
There are two ways to take the inventory snapshot of each wallet. Access the portfolio view directly in the wallet application, or access the portfolio view using the blockchain explorers. It is recommended to use the online blockchain explorers to access the portfolio balances of each wallet.
Can you explain what specific details we need to capture when taking a portfolio snapshot?
Now listen up. This is important. You must take the portfolio snapshot by each individual address that includes the ticker of the cryptocurrency and amount, the date and timestamp showing December 31st, 2024.
When it comes to EVM wallets, how should we approach taking inventory snapshots for each network to comply with the safe harbor?
EVM wallets like Ethereum, Binance, Smart Chain, Avalanche, Polygon, among others, share the same wallet address. Take the portfolio snapshot by each separate network. This is required to comply with the Safe Harbor. Further instructions on how to take the inventory snapshot for these networks are at the end. Pro tip 1, include NFTs in the snapshot. This will ensure the allocation and future cryptocurrency calculations are accurate. You do not need to include worthless airdrops, NFTs, or tokens, scam tokens, or other unsolicited tokens. Pro tip 2, you may be able to print the entire page to PDF. However, check that the PDF printing function provides a timestamp. You may need to use a different browser for the date and timestamp to appear.
When it comes to other custodial services, are the procedures for taking an inventory snapshot the same as those we follow for centralized exchanges? Could you elaborate on that?
For other custodial services that may be used, the instructions are the same as the centralized exchange.
Wallet, thanks for dropping the alpha with us today. I'll let you get back to fine-tuning those trading bots of yours.
Thanks for having me, Mac Hoddle. Always love to drop some crypto tax alpha. See you next time.
Okay, so you might be wondering, why go through the hassle of taking an inventory snapshot? Is this really necessary? Spoiler alert, yes, it is. And here's why. The Revenue Procedure 2024-28 Safe Harbor requires the snapshot to be taken. Without this, the global allocation described in the Revenue Procedure is not possible. By not complying with the Safe Harbor requirements, the IRS would be able to recalculate prior year transactions using FIFO by account, potentially resulting in more tax liability. Visit cryptotaxaudit.com/1099 for a detailed guide to staying compliant with the new IRS rules. All right, we've discussed the reasons. Now let's focus on the methods. I'll break down the 2 effective ways to capture an EVM inventory snapshot and guide you through each step. First up, Debank. It's a fantastic tool for viewing all your assets across multiple networks in one place. Step 1. Open your browser and go to debank.com. Step 2. On the homepage, you'll see a search bar. This is where the magic happens. Paste your EVM wallet address here. This could be from Ethereum, Binance Smart Chain, Polygon, or pretty much any EVM-compatible network. Hit Enter, and voila. Step 3. Now you'll see your wallet dashboard. Under the portfolio view, make sure you're selecting the right network. Ethereum, Binance Smart Chain, Polygon, whatever you're working with. Take a screenshot of each individual network's portfolio view. And don't forget, include the entire page. You want to capture everything. Tokens, liquidity pools, staking pools, all of it. And pro tip, make sure the timestamp is visible on the screenshot. It's a small detail, but it's super important if you're using this for tax reporting or tracking purposes. All right, on to method number 2, using a blockchain explorer. This is perfect if you're focusing on a specific network. Depending on your wallet, head to the right Explorer. Etherscan for Ethereum, BSC Scan for Binance Smart Chain, Polygon Scan for Polygon, or whatever matches your network. For this example, we're going to use an Ethereum address, so let's walk through it step by step. Step 1. Open your browser and head over to Etherscan. Once you're on the home page, you'll notice the search bar right there. Go ahead and paste your wallet address into the field and hit Enter. Step 2. Now you'll see your wallet balance pop up. Under the Overview section, just click on the wallet icon next to Token Holdings. Make sure to expand the rows to 100. You'll want to take a screenshot of each page, and don't forget to include the wallet address as well as the date and timestamp in your shots. This ensures you have a solid, verifiable snapshot for your records. And there you have it. 2 easy ways to get your EVM inventory snapshot. Whether you prefer the simplicity of Debank or the detailed view of a blockchain explorer, these methods will keep your records in top shape. If you're not sure how to get started or want expert help, check out the links in the description. Head to cryptotaxaudit.com/1099 for a clear guide on staying compliant, or book a consultation at cryptotaxaudit.com to get personalized advice. Taking an inventory snapshot isn't just something the IRS made up to give you extra homework. It's your ticket to staying on their good side and keeping more of your hard-earned gains. These new rules might feel overwhelming, but by grabbing your portfolio snapshot on December 31st, 2024, you're locking in a solid tax strategy that keeps you in control. Don't forget to subscribe to The Clinton Donnelly Show for easy-to-follow crypto tax tips and updates. No jargon, just exactly what you need to know. Until next time, keep it simple, stay compliant, and let's make taxes the least stressful part of your crypto journey. And remember, keep stacking, pay your taxes, and I'll catch you on the moon.